Well, hello everyone. It's August 15th. I can't believe the month is halfway over. Now, today's a huge day for Fed data. The two big reports are the jobless claims. The number came out at 220,000. The expectation, the consensus was 205,000 to 218,000. The number came 2,000 higher than expected. Nothing crazy, nothing major, just a sign that things may be slowing down, or the fact that this was a July report. Second quarter is usually a little slower. Nothing too major. I'm not going to sweat over 2,000 unemployment claims. Nothing out of whack. Now, something exciting to get about, retail sales. The retail sales report came out, and it was very positive actually, because it beat estimates. The expected number was negative 0.3% to 0.5%, and the number came out at 0.7%, and that's telling us that retail is expanding. Why is it important? Because retail accounts for 2/3 of the economy, folks. The GDP, 2/3 is retail. All right, so let's look and see how the markets are interpreting this data. And productivity, by the way, was up 2.3% in line with estimates. So nothing wrong there. I just want to give you a quick little taste of what the futures are looking at. We're up about 16 points. We still haven't made back what we lost yesterday, but we are on the way. So let's look at the chart so you could see some numbers in real time. Let's look at 6 months. So this is real time. This is where we're at right now. The number you want to look at is the 200-day moving average, the 2,800 level. If we break the 2,800 level, there's a good chance we're going to see a strong bounce. Right now, we're still in twilight zone, which is between the 50-day and the 200-day moving average. It looks like markets are going to bounce today because the retail data was really positive and the employment data was not too bad. I'm only expecting a bounce at this point. I want to see, in order for the bull market to regain strength and give me confidence in investing to the long side on speculative stocks, I want to see the SPY or the E-mini S&P close above the 50-day line, the 50-day moving average, 2 days in a row. We haven't seen that in quite a while. We've been between the 50-day, that's the blue line, and the 200-day, and that's telling me markets are choppy, sideways. We're in a wait-and-see mode. Not a good time for directional trades. Best time for non-directional trades like iron condors, credit spreads. But, excuse me, if you're going to go defensive, stick with utilities. Ticker symbol is XLU. Let me give that to you right here. Notice it's higher today and even yesterday. Notice we remained near the high. And it looks like this is a good sector. We're above the 50-day moving average. We're strong. I would wait till we're above the 61 level. But again, defensive stocks, utility stocks, if you want to see the stocks that are in the utility sector, you could look at constituents and you'll get a list of all of them here. Another asset you may want to take a look at is gold, GLD. Slightly down. Let's look at the chart of gold. See that? Making highs. You want to trade assets that are making new highs or at highs right now. 90-day high, 150-day highs. You don't want to pick lows right now. Not the best way to trade this market. Because again, we're in twilight zone and we may be staying there for quite a bit longer. We need some positive. We need China to work itself out with US. We need this tariff war to go away. And we need to get more guidance from the Fed. The Fed telling us that they're not going to lower rates anymore, and lowering rates when the market was at a 52-week high a few weeks back was not a good idea. Anyhow, expect us to drift between the 200-day and the 50-day moving average. Expect more volatility and a minor bounce to the upside today. I'll talk to you guys soon. Take care.